Good? All right, perfect. We're here to incorporate, right? You guys, okay, cool. Anybody here incorporated already? Yep, couple, good, awesome, good. And the reason I ask that is because usually when I teach this class, I usually have a few people that have incorporated, and then they say, I need to be reminded why I incorporated, right? Because someone told me to do it, I did it, and I saw really fancy people, and it looked really cool because they had PA behind their name, right, or LLC, and I thought, boy, one day when I grow up, I want to be a corporation, right? And so you do it, and you don't understand why you did it, or have a true understanding of why. So I'm hoping to clarify that for you. Plus, we can keep an eye on our watches. There are inklings for some higher earners, all right, which you all, if you're not there yet, then we'll talk about the next class you can come to become the higher earner, right? But the higher earners in the room, the new tax proposal that's in the Senate right now, all right, as much as NAR has come out against some of the provisions, and I get that, we're all called to action to oppose all this, that, and the other, there are some potentially really strong provisions for once you get to certain income levels that are going to be beneficial to you incorporating even more. All right, that's why I'm going to put a couple, I had to go through last night and change my presentation and put a couple asterisks on there saying, hey, look, this might change. So let me pull up the right PowerPoint real fast and then we'll get started. By the way, I'll give you my email address. If you're Future Home Realty agents, it'll be on FHR University. We'll reload this up so you can watch it there, and we always put load the PowerPoint right below it so you can actually download that. If you're not Future Home and you want a copy of the PowerPoint that I'm going to show, just email me. All right, if you want to, I'll give it to you now. It's on the bottom of most slides, I think. It's BobMCD, BOBMCD, at futurehomerealty.com. And just email me and I'll get you a copy of the PowerPoint if you want to take a look at it later. Because what I'm going to encourage you to do is I'm going to give you enough information today to be dangerous, all right? And that means you're going to take this to your tax professional and have them, I didn't plug in. Let's see if it's showing. That way you can be armed with enough information, maybe push back against your tax professional a little bit, because not all tax professionals are created the same, all right? Let me give you a clue. If you're getting taxes done at Walmart, all right, you probably need to find somebody else, or you need to get to a level where there's somebody else that understands this a little better, because they have those little, who's that guy, Hewitt, Jackson Hewitt or whatever, they're all out there in the Walmarts, right, come tax season. You need to go to somebody that actually knows what they're talking about, because the Jackson Hewitt guys, they're great people, I'm sure, but they, why is this not showing? I wonder. Let's try it again. There we go. A lot of times they were trained, they're going through training today to help you in January, okay? Because they churn through those kind of people that fast. All right, so you want to get, and I've got some recommendations to some people that are really good with realtors in particular that understand this concept that will help you do it. Because I think, Sarah, your promotion of this, you said, how do I promote this? And I say, just tell them you're going to save taxes, 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 right? And that's what we're going to talk about is why it's so beneficial to do it, because it's the right time of the year to start thinking about such things. Let's see if I can get this plugged in. I'm going to plug in my clicker. All right, now we're in. Okay, so full disclosure, here we go. Ready? I'm not a CPA, I'm not a tax professional. I am getting my MBA right now, just because I decided I got a little stagnant in the brain a little bit. I work out my body and I felt like my brain wasn't being challenged enough, and so I wanted to be a good example for my kids. So going back, my wife has her MBA. I'm very competitive and she's had her MBA for a while, so I'm going back and I'm taking an accounting class right now. So I'm not an accountant, but I am taking an accounting class, and I stayed at Holiday Inn Express last night. So I'm not a CPA, bookkeeper, accountant, IRS agent, or tax specialist in any way. And the reason I do this, because the guys that I recommend, my CPAs that I've encouraged people, they all want to come in and do this. And by nature, they're very conservative, because that's what they have to be, right? Because they have a license to protect and all that kind of stuff. So they'd be very careful of what you say. The reason I like to teach this is because I can be a little more real world with you. All right, and then let you have that dialogue with your tax professional about how aggressive you want to be in attacking this in a manner that would be that you'd have a comfort level, they'd have a comfort level, right? And if you have a comfort level and you can't get them to a comfort level, you might want to consider changing tax professionals, right? Because all of the stuff I'm going to tell you is on the tax books. It's available. It's readily. I've been doing it for years, but it could be considered on the edge a little bit. By some, if you're looking to a straight-laced, blue suit, white tie, red shirt, blue suit, white tie, red, blue suit, white shirt, red tie. Okay, there you go. Wearing professional, they're going to maybe tell you a little bit differently or say, I'm not so sure we want to go there, right? And so I'm just going to tell you some real world stuff and let you guys decipher it and take it in. And I'm not even going to say, knowing this is going to be on YouTube. All right, everything we teach is on YouTube, so therefore I will never run for public office. All right, because it'd be impossible. They would pull something out and pull just a little clip of me joking sometime along the way, and my whole campaign would be shot to hell. All right, so I'm not that. I'm not a tax attorney, paralegal, judge, Supreme Court justice, or anything to do with the legal profession, other than when I'm forced to be involved with the legal profession, and that's when somebody subpoenas me and I get shown up, as a broker of 1,300 agents. Sometimes you get people knocking on your door saying, hey, by the way, are you Bob McDougall? Who's asking? Right? My first question in my mouth, okay, who are you? I don't look like, and you got something hiding behind your back, all right? You're about ready to slap on me, all right? But I am Bob McDougall, broker, owner of Future Home Realty. I was an agent, obviously back in the day, right? And so I became a real estate agent in 1994. I incorporated myself in the late 90s, sometime 1998, 1999, and I wish I would have done it in 1994. All right, once someone had finally explained to me why. People had been telling me to do it, and I asked them why, and they say, oh, because. Okay, help me out. That's good. And why then? You save money. Okay, great. How's that? I'm just naturally inquisitive. I'm not just going to believe you for the sake of believing you, right? And they never could give me a quality answer because they had incorporated and forgot why they incorporated, right? And didn't have a valid reason. I want you to be armed with some information to say, hey, look, I want to make this decision. I don't want to make this decision right now. I maybe make that decision later, but at least I have some information in hand. Okay, fair enough? All right. So here's some more disclosure. Everything I tell you today, you need to verify with your own tax professional. All items discussed are subject to change due to the unstable nature of the politicians we elect to represent us. Quite frankly, could potentially change in some time before the clock strikes midnight tonight, all right? That we could be looking at some significant changes in our tax code that may affect what I'm even going to tell you today. So that's how sometimes fluid this stuff is, right? So, by the way, I'm going to share I think my last slide I added this. Raise your right hand. Everybody raise your right hand, all right? Even if you're mid-bite, okay? Even if you have a sandwich in it, okay? State your name. Don't say state your name. Please say your name. Okay. Okay. Understand that I am CEO of Me Inc. You guys don't understand. You are self-employed independent contractors, right? That you are running your own business. We drive this home in our company. I say, hey, you know what? You are running your own business, right? We are just here to help you run it in the most profitable, effective, efficient way. But you've got to get that hat on, all right, of business owner. You are not an employee. When we were first getting Future Home Realty cranked up, and I'd meet agents out, and they'd introduce me, and we'd all of a sudden, I'd be out to dinner with my family, and we'd run into them at the restaurant, and they'd go, oh, let me introduce you to my boss. I'm like, what are you talking? I'm not your boss. You're your boss, right? I have to work on that mindset with agents, right? Is that you are your own boss, all right? If it is to be, it's up to me. But with that in mind, if you're going to do it, treat your business like a business, right? Don't be an employee for your business, even though I'm going to show you how to be an employee for your business. That's the tax benefit of what we're doing, all right? But you got to get that mindset that you're a business owner. Fair enough? Okay, good deal. All right, and here's an update. Okay, I added this part to the slide. November 2017, the latest tax proposal appears to have some significant positive implications about what I'm going to share with you. All right, and I'll tell you where that is here in a minute. Okay, all right, so here are your reasons to incorporate, and we kind of covered this already. There's tax savings, and then don't forget tax savings, and then there's also tax savings, okay, followed closely by tax savings, and then don't forget tax savings, all right? A lot of people think, oh, I incorporate because it's the corporate umbrella. It's the legal protection of having my own entity. Okay, a lot of times those are my investor people that have, they own companies called We Buy Homes and Fix Them Up Inc. or whatever, right? Great ideas. There is a logical legal theory behind having your investment properties in separate LLCs, for that corporate veil. That way if something happens on one, they can only come after that one, not after all. And so I understand all that. This has nothing to do with any of that, okay? I'm just here to show you, as your agents, as your real estate sales business, right, should you incorporate, all right, and why you should, all right? Okay, and not necessarily the legal protection, because quite frankly, if your real estate sales business, all right, your broker's getting sued, right? Because the E&O policy's in his or her name. Okay, trust me. All right, so you don't need to incorporate. So don't do that. Don't incorporate for the inherent legal protection of having. What's your first name?
Josie.
Josie, last name?
Cruz.
Okay, so Josie Cruz, PA, right? She's not going to do that so that she can protect Josie Cruz from being sued, right? Because Josie Cruz, who do you work for?
Florida Realty.
Okay, Florida Realty is getting sued, all right? Not Josie Cruz, all right? So that's what's happening, right? Josie, she's going to be named in there, all right? But it's really coming after the person who has the E&O insurance, right? So we're not doing it for that. Now, what does that mean? Typical agent, okay, you non-incorporated agents right now, all right? Let's see if this sounds familiar. If not, it should, okay? All your income right now goes to a Schedule C on your tax return. Okay, different schedules. We have your 941 form, okay, or your 1040, right? Your 1040 has different schedules. Schedule A is for itemized deductions, where you take your money you sent to the child care, and then you also get to deduct your property taxes and any charitable giving, all that's your itemized deductions, right? Schedule A. The Schedule B, I don't even know if there is a Schedule B. I never use it. Schedule C I used a lot, right? Because I was self-employed independent contractor, 1099 subcontractor, and all my income went to the Schedule C, and you deduct your expenses, and here's what your Schedule C is, by the way. It's basically a profit and loss, right? Here's my income, here are the expenses. I had to pay board dues, I had to buy my signs, I had to buy lock boxes, I had to pay for gas, I had to, what else? What other expenses do we have as agents?
Technology.
Office space, technology, the ads I ran, all the things. Okay, so you list them all out. So you try and list as many as you can. So you want to make as much money as you can, but you also want to write off as much as you can, right? That's the benefit of being self-employed. And then you get to a NOI, net operating income, and that, on your Schedule C, feeds over to page 1 of your 1040, and they say, okay, because you don't get a W-2 from your broker, you get a 1099, right? 1099 income gets reported there, and so on and so forth, right? So that's the way most of us have done it in the past, and are still continuing to do it, and by law have to do it, right? Okay, you still have the ability to deduct all your related expenses are there. Right? So everything that's a legitimate expense, and maybe some that are not so legitimate, get deducted, right? And I try and show as much or as little income as I can, but then this becomes the bane and the crux of now all of a sudden my lenders in the back of the room say, oh no, they're self-employed. Right? Okay. Like, oh God. Okay, thus we go. Where's that stated program? Okay, where's that no income verification loan thing we were talking about? Okay, because most independent contractors try and write off as much and show as little income because they don't want to pay taxes. And why don't they want to pay taxes? Because no one's taking it out every step along the way, like when you're an employee, all right? And at the end of the day, you never prepare enough. Right? As much as you claim you're going to, next year I promise I'm going to make quarterly tax payments. Next year I promise I'm going to remember that 15.3% that bites me in the backside every year called FICA. Right? I'm going to remember that next year. I'm going to plan ahead and I'm going to make sure I set it aside. Right? And then what happens? The transmission goes. Right? And so all these different things happen. So you never have enough at the end of the year. That's why you avoid. How many of you guys file your taxes by April 15th? When's the real tax deadline? October. That's when extensions are, exactly. Come on, April, Schmapril. We all know that the real, exactly, April, that's just the time to file my extension. Exactly, see? And it's true, right? That's where most of us are. And so with that in mind, we still have the ability to deduct all those expenses. The net income after all those expenses is subject to income tax. That's called FIT, federal income tax, instituted in 1913 by Woodrow Wilson, God bless him. All right? You know we didn't have a federal income tax until 1913? Okay? Before that, no federal income tax. Not a thing, not a drop, not a dime. Okay? Oh, to live back now, yeah. Running water's nice and electricity's good too, but, you know what I'm saying. Okay? So, income tax as well as FICA. Federal Employees Contribution Act, okay? Social Security, Medicare, those were instituted in 1934, 35. We're in the midst of the Great Depression, all right? FDR, the greatest president in the world, if you talk to certain people, or the bane of my existence, if you talk to others, or of others, not mine. Giving myself away a little bit here. FICA, all right, is Social Security, Medicare. Great idea, right? Social Security, Medicare, money put aside on your behalf, you pay in so that someday in the future you can take it out, right? It's an annuity. Problem is, they're building bridges with your FICA money, right? Everybody understands that, right? Okay, this whole, the money set aside in a lockbox never to be touched until you're ready to take it out, all right, is BS. All right, and it was BS from the very beginning, because here's what happened. In 1934, Franklin Delano Roosevelt said, I got a great idea. We have a lot of people out of work, right? It's called the Great Depression for a reason, right? So we got a lot of people out of work, so what are we going to do? Well, we got this older workforce, and we got all these younger people. How about this? What if we pay the older workforce to quit? All right, to retire. Well, they can't retire because then they'll be in the soup line with everybody else, right? So we were just trading one group for the other. Well, how about this? What if the new hires that come in, they'll start paying FICA, right, for their retirement, and we'll pay the older workers who are forcing out of the workforce a retirement with the money that's coming in. And by the time that these new workers in 1934 are ready to retire in 1974, right, we'll have a whole new batch of workers paying in, and we'll pay them, and, you know, so they're paying today's investors, well, it's called a Ponzi scheme. You understand that? The first people that received FICA never paid in. You understand that, right? They were just paid to get out of the workforce so we can get new people in, right? And so it was a kind of this, so it was built. Now, if we did that today, right, you're called Bernie Madoff and you're thrown in jail forever, right? Because it's a Ponzi scheme. It's a pyramid. You're paying future investors with today's, you know, it has to crumble somewhere, right? Okay, that's all Social Security is. You're not getting the money that you put in. You get the money that hopefully there's enough workforce. Well, problem is, do you know why they set the retirement age at 62 back in 1934? Yeah. Well, the average life expectancy was 60. Okay, back in 1934. So let's set it at 62 because people will pay in, they'll die before they get to collect. All right? That helps our Ponzi scheme work. All right? Well, the problem is we've gotten healthier, right? Healthier, yes. Okay, getting healthier, we're living longer, and so we're outliving the Ponzi scheme. Right? That's why you hear, oh, it's in trouble, you know, Social Security, Medicare are in trouble, right? It is. Because we don't have enough money going in to pay the people that are living longer than they were supposed to, right? And it's just, but which is a good thing. We're glad we're healthier. So, all that being said, right now, that was just my own little commentary on the whole tax structure. But, by the way, you need to understand this stuff. Don't go blindly through life accepting what people tell you, whether it be Fox News or MSNBC, all right? And I talk from both ends of the spectrum, all right? Do your own research and be educated. Understand where this stuff came from. How in the world did they start this, and why did they do this, and what was the reasoning behind it, and is there something else I can do other than that? Because I'm a firm believer that, you know what, thanks but no thanks, I'll self-retire. All right? So I'm going to show you a way, pay less into FICA. All right? And show you how to do it. Don't be part of the Ponzi scheme. All right. So Thus, the reason why I can never run for political office, right? Because that's out there. All right, I've called Social Security a Ponzi scheme now forever, and so I can never get elected dog catcher. All right, okay. With that, yes.
And you record this?
Oh, that's right. It's out there on YouTube. That's what I'm saying. I'm done. I'm toast. All right. So, but here's the problem: your net income, all right, is subject to income tax and FICA. Now, here's the other catch about FICA. You know what Franklin Delano Roosevelt and his genius thought of? Is that 15.3% is a lot of money, right? Just for FICA. That's not your federal income tax. That's just for Social Security and Medicare. So we'll divide it up this way. We'll have the employee pay half and the employer pay half. Fair enough. That way it's a little more palatable to the masses, right? If we can say, oh, your employer, we're making them pay half of FICA, right? Well, that's all well and good, except when you're a Schedule C filer, guess what you are? Both. You are an employee, and so do they say, oh, since you're both, you only have to pay half? No. Since you're both, you get to pay both, right? So that always the part I would try and remember to try and set aside my 15, 20, 25, 30, as I moved up the tax structure, right? % away from my federal income tax. But that extra 15.3% always bit me in the backside every year, right? I'd go and I think I'd have it all lined up this time. I'd go and deliver my taxes to my tax guy, all right? Or a lot of times I was doing it on my own. I'd crank out the math, and at the end of the day, they'd say, okay, don't forget this, and multiply. I'm like, hi. You know what I mean? And when you're making, 120 grand, that 15% now becomes 18 grand. I'm like, geez, forgot about that one. Ouch, right? I thought I was lined up and ready to go. You're doing it and you're not even realizing, because a lot of you are taking your taxes and you're saying, okay, write the check, and you're not even paying attention to what happened. All right? I paid attention to what happened. I said, there's got to be a better way. All right? So here's the better way. Let's continue on. So right now it's the easiest way to file. There's no additional, it's one page Schedule C, feeds to your 1040. Only a Schedule C attached to your personal return. Now, everybody got that? That's what you guys are all doing right now. I don't care what it is. And we're going to show, by the way, I'm going to show you the overarching principle, and then we're going to go through an example. Because I'm an example guy. I like seeing numbers, and it brings it truer to life. Okay? Typical, agent. Okay. Incorporated agent. Start to write some of these terms down. They may be new to you. Everybody's familiar with the 1099. What I'm going to teach you to do as an incorporated agent is to take a salary plus a K-1 distribution. All right? K-1 is an IRS tax term that basically it's a shareholder distribution from the corporation to the shareholders. Okay? You guys see K-1s, right? Okay, I need to see it too often, right? And the K-1s aren't enough, so we have to go, let's go stated. All right? And so with that in mind, that's why your mortgage guys always say, hey, look, man, I need every page of your return. Right? Because some of you that's why you've got some people that have, some investors are looking for new investment loans, and they've got other investment properties. They do all their investment properties are on a Schedule E, right? So you guys need to take a look at the Schedule E, because the Schedule E compiles and feeds to the 1040, but there's a neat little trick that the mortgage guys know. They know right away, let's add back that depreciation, right? Okay, so that's why they need to see those Schedule E's so that they can take the depreciation portion of it, because that's more of a paper loss than an actual loss. So you can add that back, and maybe sometimes that's make or break on qualifying, not qualifying sometimes, right? And so all these things are important, but that's why you'll see that they want to see all these pages, right? So you can take a salary plus a K-1. We'll talk about the details in a minute, okay? You still have the ability to deduct all your expenses. That's not different than the Schedule C. You don't do it because you get more deductions. The only reason you get more deductions is because there is a cost to incorporating, right, that there isn't involved in a Schedule C. That's why we also promote that we're going to show you a break-even analysis, because if you're not making any money in the business, then don't incorporate. Just to say you're incorporated, that doesn't make any sense, right? It has to be a dollar for dollar value in that. Your net income is still subject to income tax. So I'm not saying, why? I don't see any advantages yet, because there aren't, right? Up till now, okay? If you get nothing else from this, write this bullet point down. Only the salary is subject to FICA. Now light bulbs are starting to go on, right? Only the salary is subject to FICA. Now, there are costs associated, so we have to weigh that in, right? Because there's more cost to be incorporated than you are if you were just a regular 1099 Schedule C filer. There's some monthly and quarterly payroll reporting that's required because you have an employee, right? Your corporation has an employee. There's an annual corporate tax return. So I have to file a, help me out again, Josie Cruz, PA, right? Her corporation called Josie Cruz, PA. By the way, we'll talk at the end about what I call my corporation, all right? And there are very specific rules. It's not my rules, it's DBPR's rules, okay? Josie Cruz, PA pays Josie Cruz a salary every month, right? The good news is that Josie Cruz, PA still has access, and Josie Cruz has access to all the funds inside Josie Cruz, PA, so she can still pay her kids school tuition, she can still pay her car bill, she can still pay non-business related items from my corporate account. You just don't call it an expense. You can't call it a legitimate expense, you call it a shareholder distribution, because you can take money out along the way, but it's not income to the salary. Because at the end of the year, Josie Cruz gets a W-2 from Josie Cruz, PA, all right, not a 1099, because she's an employee, right? And that portion, that salary, is subject to FICA. But all the leftover, don't have to pay that 15.3%. I'm here to show you how to not pay that 15.3 on all the leftover, that K1 distribution, all right? Yes, ma'am.
Okay.
Yes.
So let's just say you're paying yourself, I don't know, $40,000.
Yep.
Right?
Yep.
And that's just not enough to live on.
Got it.
So that's when you take the K1.
And you still, well, you don't, what happens is you track it all along the way, and at the end of the year, you're going to get 2 forms from your corporation.
You're tracking your distribution?
Yes. Yeah, because you label it. Every check is coded, right? And you have a payroll expense, you know, that's one of the codes that you have. And so that was the $40,000 that you took in 12 increments, or however often you paid yourself, right? But all the other money, when you wrote a check for kids, I don't have time to exchange money over, that's just, my kid's soccer, he's going on a weekend, write an $87 check, right? You just code that. For me, it's $391. It's been that way since 1995, it's 97, right, when I incorporated. I still have my chart of accounts that I started with back in 1997. $391 is shareholder distribution. So it tracks that all along the way, and at the end of the year, my corporation sent me a W-2, right, for my salary, and then also sent me a K1 for all those K1 distributions added up, right? 87 here, you know, this kind of money, all of a sudden it added up to the extra money, all right? And so that's what goes on the K1.
So is there a limitation on the K1?
Like how much can go to K1 and how little salary you can take. Obviously, I'm starting to see the light. Now I start to get the questions like, okay, so how low a salary can I take, right? Okay, we're going to talk about that, and that's why I like to teach the class instead of the accountants, right? Because that's where they start getting like, we're treading thin water, you know what I mean? And I'm just saying, well, you know, let's talk about that. And so these are all, you guys are starting to see it. I get that. That's perfect, all right? And now let's go through an example and kind of really drive it home a little bit, all right? Okay, there's some annual state filing fees, by the way, you have to pay the state to be a corporation as well, all right? It's through my SunBiz or whatever that is, my Florida, whatever, sunbiz.org, yeah, okay? All right, so here's a real life example, all right? Let's say an agent that nets $75,000 in commissions after expenses. So if you're Schedule C, you made $100 gross, you wrote off $25,000 in expenses, right? Legitimate stuff, you know, advertising, technology fees, my phone bill, all that, and you left out with 75 grand, right? That 75 grand, okay, normally the Schedule C agent is going to pay income tax on the whole 75. Can't get away from that, all right? The only way to get away from that is to hopefully they're going to lower tax brackets as well. That's the other part of this thing, right? That we're going to start to get the tax brackets lower a little bit, so our thresholds are going to be a little bit less, right? And again, I can't get you out of that. I wish I could. All right? Vote differently. That's all I can tell you, right? Okay? 75K, it's the only thing I can help you with. But right now, they're going to pay, in addition to their federal income tax, they're going to pay an addition, okay, additional $11,475, which is 15.3% of 75K. Right? That's the FICA portion. Remember, it's 7.65 for the employee, 7.65 for the employer, but you are both. Remember, I made you raise your right hand. You didn't know that's what I was doing. See? Now you're admitting that you're self-employed and you owe both sides of that. Okay? 15.3 added together. By the way, the 7.65 is technically broken down into whatever. I know it's 1.49 on each side is for Medicare. The rest is for Social Security. All right? It becomes important later because technically the Social Security portion caps. Okay? Once you hit one, it's about 120 right now. Okay? It kind of goes up every year. But once you hit a max of X amount of dollars, you stop paying the Social Security portion, both the employee and the employer, right? But Medicare goes on forever. Okay? And once you get to higher levels, Medicare goes back up again. Okay? It's just because you haven't paid your fair share. Don't forget. All right. 15.3% of 75 grand, all right? So that's the part, remember that 11 grand? Remember I told you I get bit in the backside every year? That's the bite. I thought, I planned for my federal income tax. I forgot about the FICA. Next year I'm going to remember the FICA. Problem was, I didn't have the money to remember the FICA. I was too busy living, paying my kids soccer, to worry about FICA. Like, I'll deal with that in October of next year, right? Okay, we'll just kind of keep robbing Peter to pay Paul, and next thing you know, I've gone through all the apostles and I don't have any apostles left, right? Okay, holy smokes, there's no more apostles. Who else can I rob to try and pay who? All right, so 11,475. Everybody with me? Okay. The incorporated agent. Let's say, okay, let's go back to our example here. You said 40. I chose 36. Okay, and I just changed it. I used to teach 24. I made a lot of money, and I never took a salary greater than 18. All right? I was aggressive. Okay? Here's what the current tax law says. IRS tax code says that S Corp owners, that's what you're going to be, by the way. Write that down. S Corp, not C. Okay? Be an S Corp. S Corp filers need to take a reasonable salary. Yeah. What's reasonable to me is different what's reasonable to Josie, and probably what's considered reasonable to the IRS agent, right? But that's okay. All right, I can still defend myself on reasonableness, right? So you, again, remember how low can I go? Right? We'll do a little limbo with this thing. Okay? How low a salary can I take? Remember, the less salary you take, the less you're paying in FICA. Okay? Now, I'm looking around the room. We've got some younger people in here. Here's the downside of limiting your FICA contribution is that your FICA, when you retire, your FICA, how much you get in your Social Security, once a year they send you this thing, if you retired today, here's what you would expect, right? It's based on your best or highest contributing 40 quarters, 10 years, okay? Josie hasn't even contributed for 10 years, right? Some of us have contributed plenty, 10 years times 3 or 4, right? Okay, right.
High earning months were 10 years ago.
That doesn't matter. Still based upon that. So some of us have already got that in the bank, right? I've already banked my highest 40 quarters, so let's get this thing down low, right? Others are younger ones. If you're planning on having Social Security around to pay you when you're 60, whatever, okay? Because they're gonna have to raise the retirement age. Have to. None of them want to do it. This is going to take somebody who says, hey, I'm going to be elected for 2 years and out because I know no one's going to re-elect me. All right, but I'm going to, at least I got my grandkids to answer to because the Ponzi scheme's falling apart, right? So someone's going to have to come in and just say, hey, look, I know I'm not here to get re-elected. I'm just here to fix it, right? And so they're going to come in and try and fix it and they say, first thing we got to do is we got to get the retirement age 68. We can't start paying out 62. People are living too long. It's probably even higher than that. okay? The means testing they're looking at is probably in the 70s, right? And so all that being said, but Josie that's when you might get upset with me. You're going to go back and say, flashback, all right? When you're ready, you're on your cane and you're ready to retire. And it's like, that son of a, he had me stop paying in and I don't have any legitimate quarters in, right? Now, here's my theory. I'm going to take the money I'm not paying them and go buy investment property and go invest myself. I trust myself to invest better than I trust the federal government. Yeah. Okay, amen? Can I get a white hanky waving at me? Okay, anywhere? All right. And so I'm just going to self-retire, right? Okay, so I'm going to take care of it myself. Thank you very much, right? That's the whole plan. Got it? So I see some light bulbs. So here's what happens. That same agent decides to incorporate. They're going to take a $36,000 shower, which is very safe, in my opinion. Okay? Again, your accountant may differ from me. I think it's totally safe. They're going to pay income tax on $75,000. Look at my little parentheses here, though. This could be less at higher levels based on the latest tax proposal. Here's what's coming down the pike. Let me just give you a heads up. You know, they're lowering, one of the big points behind this tax reform is lowering the corporate income tax rate. And that's not for you, that's the C Corp. Remember I told you B&S? When they talk about this corporate tax rate going down, that's the C Corp tax rate, okay? Because the entity, the corporation is taxed. When you're an S Corp, the corporation is never really taxed. You'll hear this term. It's called pass-through corporation. That's what an S Corp is. What they do is, by definition, an S Corp, which is what you would be, has to take all the funds. Remember I said your corporation's going to give you two forms at the end of the year? One's going to be a W-2, the other's going to be a K-1. What you do is you make it all wash out to zero every year. There are no, again, I'm taking accounting right now, there are no retained earnings in the corporation. All the money gets distributed to the shareholders and or the employees. Okay? You are both, right? So you distribute it, right? It's out. And then you start the next year, fresh and clean, here we go, let's get going again in here. Now, you can still leave money, you can fund it, right? Let me put 20 grand in there to get the corporation started, leave it there, and next year, at the end of the year, you want it to say 20, because all the money's been distributed from the corporation, right? That's why it's a pass-through, right, corporation. Makes sense, everybody with me? Okay, you didn't know. See, this is not one of those real estate classes you're gonna leave and say, that was kind of cool. And this is like, wow! Yeah. What a load of information that is. See? Where have you been all my life, right? Same thing I said to my wife when I saw her for the first time, right? Okay. So, but here's what I'm talking about. They are talking about, because everybody's saying, well, that's not fair to the little guy, to small business, right? Because right now our corporate tax is way too high. It's 35%. It's stifling to big companies. They're leaving money offshore, they're not hiring anybody and all that kind of stuff. You start to lower the corporate tax rate, and if you're a supply-sider like I am, all right, God bless Ronald Reagan, all right, if you are a supply-sider like I am, you believe that the more monies that a corporation has is allowed to do and not pay the government, then they can go out and reinvest, buy new materials, buy new equipment, hire new people, and next thing you know, Katie bar the door, here we go, right? So that's the whole idea of lowering the corporate tax rate. Well, they say, well, that's not fair to the pass-throughs. They're not getting a break, right? So what they're talking about is limiting that S Corp K1 distribution, right? That pass-through portion, that the max you're going to pay is 25% on that. Now, for some, if it's too low at lower tax brackets, it's still higher than what you would have been paying, right? Because your normal S Corp tax rate was already at 15. It'll be the lower of the two. But if you're at 39.6, that 25 is looking pretty enticing, right? Because remember I told you I can't help you save federal income tax? That may change in the next 12 hours, right? That if I can make it more of my income S Corp distribution, they're talking about capping S Corp distribution at 25%, and at higher threshold earners, when you get above that 25% threshold, then it's at 32 and then 39.6, which is the top nominal rate right now. That could be a significant savings for another reason to incorporate. Are you with me? Okay, good deal. All right, so let's say though we're right on that probably this in our example, that person, when you take 75, if it all washed through and everything else, you wouldn't be at the 25% threshold even, I think. Or if you were, you're probably right at the 25%, okay? So it's not gonna matter in this example, but if you start putting some digits in front of that 75, all right, that can make a difference. You with me? All right, good. Okay, so they're still gonna pay, let's say in this case, they're still gonna pay federal income tax the same. Schedule C and the incorporated agent. Federal income tax, remember FIT. Now here's where the change happens. The incorporated agent only has to pay the 15.3% on the salary. Remember we talked about that, on that 36 grand that we took as salary. In our case, that's 5508 as opposed to 11,475. Okay? Remember, the savings, think about this. Here's what you're currently paying on FICA based on X. If I can base my FICA on Y, my savings is 15.3% of the gap. The difference between what you're currently having to pay on and the salary that you take. For me, back in the day, my first year, I was already making 6 figures in real estate. I was already capping FICA, right? At the time, it was about 100,000 was what the cap was. It's gone up since then. It was about 100,000. So my first year I incorporated, instead of paying FICA on 100, I paid FICA on 18. Okay? I was a high school math teacher before I got in real estate. 15.3% of 82,000, the gap, I saved over 12 grand year one. All right? And not paying into FICA. Okay? Your saving is on the FICA, the 15.3 of the gap. Are you with me? Okay? Cool. The incorporated agent paid $5,967 less in FICA. All right? Plus, as we get bigger, it becomes even more. Because, and especially with this proposed tax change, could be even really big, because now we're saving on federal income tax in addition to my FICA savings. Okay? Could be huge. All right? More example. Now, that 5,000, so right now let's lock in 6 grand. We saved 6 grand in this case, right? Well, the incorporated agent, they had to incorporate, all right? By the way, if you go to a tax, don't pay somebody to incorporate you, all right? Literally, it's 11 or 1240.38 now, all right? By 1242, somebody could incorporate right now. Go to sunbiz.org, you'll have a POO number, and you did. Now, don't do it because I'm going to talk about your name. All right, I'm going to show you how to, okay, don't do it because I got this really cool one. I found it, it's available, right? Well, there's very limited on what you can call yourself as an incorporated real estate agent, all right? Corporate bank account should cost you $0. Fifth Third has a deal going right now, just, small business. You don't pay to have a bank account. I mean, you shouldn't charge you monthly, all right? They want your business. You should, have a relationship with somebody. Quarterly payroll costs you about $300 a year. All right, what does that mean? Here, do what you do well, all right? Don't pile, I'll figure out these 941 quarterly tax filings, right? Back in the day, I had a little packet, threw it at my accountant. All right, he threw me something back at the end of the month, said sign here, write this check. Nowadays, it's no need to sign anything. We've electronically filed everything, and the money's coming out of your account on such and such a date. All right, that's what they do. All right, because they electronically file even the actual taxes are taken out of your account. Okay, but you do have to have a separate bank account for your corporation. Everybody with me? Okay. Question? Yeah? No?
Okay.
All right. Good. All right. Corporate return. In addition to your personal tax return, you have to have a corporate tax return. Probably run you about $500 a year, okay? Can you do it on your own? You could. Here's why. I would rather you do your personal return on your own than your corporate return. The reason is because the corporate return has a balance sheet attached to it, all right? And most balance sheets, because of the intricacies of going back and forth, require somebody with some nominal familiarity with accounting, okay? To understand what affects what is considered what's on a balance sheet. The balance sheet assets should equal liabilities plus equity, all right? Let's go back. Remember, you had accounting. I can see it in your eyes. You back in the day, all right? You're like, yeah, that does sound familiar. That's called the basic accounting equation. Assets equals liabilities plus equity, okay? All right? There are state filing fees, about $150 a year, all right? Florida, the state of Florida wants their piece of, to call yourself a corporation. And the annual total of all that's about $1,000. Let's just round it to that, because you're not going to have to pay to incorporate every year. All right, once you do it, you're done. All right, so let's call it costs $1,000. All right, so you save $6,000, but it costs you $1,000 to do that. Okay, so in this case, you're about net positive $5,000. Okay, better than a sharp poke in the eye, right? And these agents, trust me, I teach all the time, and these agents, $5,000, I don't know if it's worth it. And the same ones who will leave real estate because they don't want to pay $428 to the MLS. All right, okay? Yeah, I know it's no big deal to you, all right? But you obviously, okay, right? Trust me, it's that time of the year, right, Jim? All right, we've got 1,300 agents, like, I'm not so sure that real estate's for me, right? Okay, right? All right, so it's that time of the year we need to start taking a look, and I don't blame them, right? It has to be who wants to, you don't want to be a 501c3, you know what that is, right? It's a nonprofit. That's the form you file when you're a nonprofit. You don't want your real estate corporation to be a nonprofit, okay? Okay, you don't do this if you're a nonprofit. You want it to be a profitable enterprise, all right? Okay, here's some frequently asked questions. We got one already, right? What if I need more than my salary to live, right? Wasn't that not the question? Hey, I took $40,000, but I need more $40,000. That doesn't cover my mortgage, right? How am I paying the rest of the stuff, right? No problem. You still have access to all the money in your corporate account, even to pay personal bills, even for my kids' weekend travel team hotel room, right? Okay?
But I thought that would be commingling funds and you don't want to pierce the corporate veil.
Okay. No, it's not, because you are labeling it correctly. It'd be different if you were trying to call, hey, my corporation's going to pay for my kids' weekend, travel team thing, okay? But it's not. Commingling funds really only applies, all right, to property management and escrow accounts, okay? You don't want to do that, okay? You absolutely don't want to do that. But other than that, okay, security deposits if you're a landlord, right? You don't want to commingle. You don't want to put the tenant's security deposit in your operating account, all right? What's that? Other people's money, OPM. But it's your money because you're the only. It'd be different if you had other shareholders, right? If you had all these other shareholders to respond to, but you don't. It's you and your husband, maybe. Jeanette and I are the only shareholders always have been, of Robert McDougall, PA, right? That was my corporation name. Real creative, huh? All right, okay. But that was the name of my corporation back in the day, and we were the sole shareholders. So yeah, we have access to all those funds the entire year. It's just that if it's not a legitimate business expense, I can't code it as a utilities expense or whatever my expenses that I have. I code it as a shareholder distribution. All those 391s, and it still rings in my head, add up at the end of the year to my K1. Okay, and so I got distributed there. Because I didn't want to take it as salary. Why? Because every time I take something as salary, what am I subject to? FICA, right? And what am I trying to avoid? FICA, right? Okay, so that's what we have to do, all right? Isn't the accounting paperwork a nightmare? Can be if you let it, all right? But you should be tracking your income expenses regardless of being incorporated or not. It's called a budget, right? It's called treating your business like a business. Right? So even if you're not going to incorporate and you're a Schedule C, a filer, you should know your P&L. You should have QuickBooks already anyway. Okay? I run a fairly large corporation. We sold over $1 billion in real estate last year, and I do it all on QuickBooks. Okay? So don't think that you need, okay, it can be done, right? And so you should be tracking this stuff anyway if you're really legitimate and sincere about running your business like a business. And you all raised your right hand, so you are. Okay. I already have a corporation. Can I use that? Right? Some of you do, right? More than likely, no. Okay? Because it's not named correctly. Okay? DBPR licensing law states a broker can only pay a licensed entity. Right? So I can only pay my agents that are licensed, and I can only pay them as they are licensed on their real estate license. DBPR has strict restrictions. That's why they're restrictions, because they're strict. Okay, that word's in there. The root is in there. Okay, they have a lot of rules about what you can call a corporation, because what they're going to say is, I'm going to get this down. Josie Cruz, look at that, Bam!
Bam.
All right. Took my omega-3 today, or whatever it is that took to help me remember things. Josie Cruz, I can only pay her, if she were an agent of mine, I can only pay Josie Cruz because that's what her license says. What the DBPR has determined, that Josie Cruz PA or Josie Cruz LLC, Josie Cruz PLLC, and Josie Cruz Inc.?
I think, no, you can't use it.
Can't use Inc., okay?
Oh, shoot, I missed that.
Okay.
PA or LLC or the.
Okay, that's right. PA, comma, PA, your name, legal name, comma, PA, legal name, comma, LLC, legal name, comma, PLLC, right? Professional Limited Liability Corporation. It's become very vogue lately. I don't know what, it's just whatever they decide. Okay. All of them you want to treat as an S corp. Now, anything you can do, you just have to make an S corp designation. Your tax person will tell you this, that you can make an election to, yeah, I want to be treated as an S corp, right? So you make an S corp election, all right? But what DBPR says, oh yeah, Josie Cruz PA, Josie Cruz PLLC, that's the same Josie Cruz who passed the test, right? That's all they want to know. But if I call myself, I'm the best real estate agent in all of Clearwater, boom, the bomb, right? Comma LLC, which she probably is the best real estate agent in all of Clearwater. Why wouldn't you be? All right. I, as their broker, can't pay that entity because DBPR says, how do I know that's the same person who passed the test, right? Plus, you know, DBPR, and FREC combined, or they're kind of interrelated even though they're not, right? They like to talk to each other. They want the public to be able to track down, okay, who is this person? Who's on the name on the sign, right? Is that, you know, this corporation, you know, who is that? Who's the entity that owns that thing or whatever, right? So that's why. So when you incorporate, make sure you choose one of those terms. All right? Jim, you have anything to add?
Yeah, just one thing to add that I learned.
Yeah.
The last couple of years is that, yeah, that's also not the one that you want to go buying your investment homes through.
Correct.
Use that only for real estate, for your license, that's it. If you're going to create other things to buy homes through, create other things.
Because the other things, buying your homes through, you can have, there's no rule on what you can call that as long as it's available, right? Okay, call that whatever you want. I buy houses and fix them up Inc., all right? Okay, exactly, right? Yeah, and that's right, and that's a good point because, and I think you hit the nail on the head. You want it for your real estate sales income business is Josie Cruz PA, all right, or PLLC. Question?
So you want to create a whole separate entity for your investment property?
Yeah, just separate.
Yeah, exactly.
And like you said, you can do whatever name you want for that.
Right.
It's just for your real estate license for a broker to be able to pay it. You have to use what's on your license right now and just add one of these designations.
Okay.
Set it up.
Yeah.
There was a question over here. I saw a hand raised. No? Good?
I did. I think I answered it for myself.
Look at that, how smart you are. You start answering your own questions. Let me give you the clicker. It's all yours. All right, okay. All right. Everybody good so far?
Yeah.
All right. Okay, what's the break-even point when incorporation pays for itself? Well, we just said we're going to we're going to save 6, pay 1,000, and have about 5 net, okay? So, obviously, if I was only making $24,000 a year as an agent, do you think I'd take a $36,000 salary? Probably not. Call yourself General Motors then, all right? Okay, let's lose some more money, all right? Okay, no, so we don't do that, right? And so I think how aggressive you are. Obviously, if I was only netting $25,000 to $30,000 a year in real estate, okay? First of all, if that's all you're doing, that's fine, because we've got part-time agents, that's all they want to do. Got other people that are like, hey, you know what? You probably be better off serving at Cheesecake Factory, okay? Quite frankly, all right? I know you got your real estate license, all right? But my server that I use all the time at Cheesecake in Nashville, I mean, she probably makes 60, 70 grand a year, all right? You might want to consider that, all right? And then she should make, you seen the menu at Cheesecake? That thing's huge.
Oh, yeah.
It's like a phone book. It's awesome. It's like, what do I feel like today, man? Do I want Asian? Do I want... It's all there, okay? Holy smokes. My wife, she came from the restaurant industry, from the finance arena of the restaurant industry, and she's consistently amazed at how well Cheesecake can execute such a large menu. All right? They obviously, that you want to study a corporation that knows what they're doing and has done great training. I don't know this to be a fact other than the results speak for themselves. The fact that they can deliver and execute that size of a menu and with consistency is amazing. because you got people at other places that can't deliver that consistently when they have 3 items on the menu, right? Okay, it's a huge thing. All right, anyway, I digress. I like to study businesses, by the way. It's fun. I mean, you know what? I stopped watching the NFL, so it makes it nice and easy. All right, I got an extra 6 hours of my week now. It's just awesome. All right, going for walks, playing croquet. I mean, kids and I played croquet. When's the last time you played croquet? You ever got croquet? All right, that's awesome. Croquet's awesome, man. You get to be poisoned, and then once you're poisoned, you can hammer everybody. You're just going around and you whack them and send them all off into the street. Okay, and we have hills in Nashville. If I can get them on my hill, if I can get up the hill, they go whoa, and they're rolling down. Next thing you know, they're way down at the other end. Sorry, someone raised their hand. I'm sorry.
Me.
Yeah, Sarah.
So just on a side note.
Yeah.
Being educated about all this stuff and not watching TV.
Yeah.
The Cars That Made America on
Yeah.
the History Channel
Yep.
is a phenomenal documentary. I mean,
The Men Who Made America.
huh?
The Cars That Made
The
America?
Cars That Made America.
I'm going to watch that one because I made.
Amazing, because you mentioned General Motors and it reminds me
Yeah.
of that, and it talks about Ford, and I mean, it goes deep. It's like 3 hours per section of it, so it's like 9 hours full.
Awesome. I'm going to watch that next because that's it. And speaking of which, while you're on it, all right, The Men Who Built America is eight series long. Have you watched that one?
I haven't, but I'm curious, is the History Channel showing history stuff now?
Yeah, right, exactly. You have to go to Amazon. I go to on Amazon Prime is where I find the real good stuff on History Channel. All right. Yeah. It's not Pawn Wars or whatever they say. Yeah, exactly. Okay, yeah. I don't watch it actually on TV. I watch it through Amazon Prime.
So I'm kind of
Incredible.
the scenario.
Yeah.
And for me, I had my 40 months,
Yep.
long time.
Yep.
So I don't necessarily need to worry about doing anything special with my savings. Because I'm already vested.
Right. Your FICA's already gone in.
Somebody like this one.
Yep.
If she doesn't do something with that savings.
Yep.
When she gets to be my age.
Yep. She's going to have less to draw from. All right. My theory is I'm not so sure where it's going to be when she's 70, 84, because that's where it will have to be when she's ready to start drawing, right? So even if it's, minimal. I just, that's why the other class we have on FHR University, or we have it recorded, and Sarah, she always dangles, Sarah, there's no affiliation between Sarah and I, other, like a monetary thing, but she said people who missed the class, we'll get you, you're not feature home, so you can't watch it, but we'll get it to you if you just bring me an order, right? Is that what it is? Okay, bring me a title order, and she'll trade you a title order for the replay of this, so.
Is that second strategy that goes along with it?
Yeah, I teach speak the language of an investor class, and it's designed to help you work with investors, but at the same time, most agents leave that saying, I need to be an investor, right? Holy smokes, where have I been? I need to start buying my own investment property, right? And start doing it. So, but I agree with you 100%, Jay. It's perfect. All right, so I already have a corporation. Can I use that? Oh, I went backward. Okay. Can I choose my own fiscal year? You can, all right? I suggest because you can't choose your fiscal year for your 1040, right? And because you're a pass-through corporation, meaning all the funds have to be distributed, that's why I love to teach this late November, early December. I'm going to give you a full month to get yourself up and running come January 1, right? Make that your goal. Okay, I want to be incorporated and ready to go, so every dime, not only incorporated, but my request for my license change, because agents come to us and they bring us their corporation documents, and I say, great, I need your license to say that. And so then they have to go to DBPR, send in a proper form and pay a $25 fee or whatever it is, and then their license gets changed with DBPR, because it has to be officially changed with DBPR until I can start writing checks to that corporation.
It's an RE16 if anyone.
RE16, Jim, I knew we kept him around for a reason, all right? RE16 through.
RE16 is so you can add the PA or LLC to your license. It's $30.
Got one over here and I'll be right back. There's one here and then, yeah.
I just want to make sure I understand the pass-through correctly. So let's just say your salary is $50,000, you're taking a K1 of 20. So the 30 that's left over, you want to be...
No, your K1 was 20. So what your true net income was 70 in that case. Net income is actually 20 because your net income, your salary is an expense to your corporation, okay. Right? So you already took the 50, right? There's 20 left over. And that 20 that's left over is what's going to go on your K1.
Okay.
Does that make sense?
Yes.
So it's the difference between whatever's left over goes to your K1.
Gotcha.
Okay, but remember, in your case, in that case, we'd probably want to flip those.
Right.
Okay, 20 salary, 50 K1.
Yeah.
Exactly. All right, that would be even better. My suggestion, my non-CPA, I don't have to worry about losing my CPA designation advice, is, lower salary the better. All right, my guy, he talked me into I used to have 24 on the slide as a salary, all right? And he talked me into, do 36, it's a little safe, and so I finally gave in and changed it to 36, all right? But you be as aggressive as you want, okay? Remember, it's all about limbo. How low can you go, all right? Okay, and to avoid that audit. And sometimes, hey, if you haven't been audited, then you're not testing it enough, in my opinion. Okay, that means you're not close enough. Get lower, all right? Okay. Yes, sir. Oh, you know what, here, I'll be right,
My
yep.
question is just basically, so your advice then would be to file with the state now?
Absolutely.
And pay, do we have to do it again in January then?
No, what you could do is I think if you do it now, you could still choose your start date of January 1 and then have the corporation set.
Right.
And then,
And then in January, you would submit everything to the DPPR?
yeah, even better if you got some closings that are lined up for January 4th.
We have some closings for December 29th.
Yeah. Unfortunately, well, unless you incorporate now and get it changed by then, because there's no retroactive. You can't. Now, I'll tell you with this. If you're a future home agent, I have had some agents that have asked us, because they don't need the money, hey, can you hang on to that and not distribute it to me until my PA's in? And that's fine. I mean, because trust me, I don't distribute commission checks a lot when I'm still don't have my lead-based paint addendum. All right, okay, it's the only leverage I have. If I've already given them their money and I still need my lead-based paint, the chances of me getting my lead-based paint are 0 and 0. Okay, like, oh, that check's cashed and gone, all right? Okay, so that's the only carrot I can dangle is their money. So with that, I've had some agents say, hey, look, hang on to it, okay? And just because I already sent in my paperwork, it's only gonna be, they telling me a week, and then once it licenses, then I can cut the check to the new entity. Let me go back here first. I want to make sure I go in order.
We're going S corp.
Yep.
So what determines if it's PA LLC or PLLC?
Right.
Personal preference.
Well, what would be the differences in those?
Talk to you can talk to a tax accountant.
I know the LLC originally started, the PA is always an S corp, I think.
Yeah.
LLC starts as a C corp and you do the election for an S corp. I don't know what the difference, I've seen people in our company do the PLLC and I'm like, why? It's the same savings.
For me, it's all about tax savings. Other people are going to sell them on this inherent legal protection of having one over the other. I'm not an attorney either. In addition to not being an accountant, I'm not an attorney. So I don't know that really matters in my opinion.
I think PA sometimes.
Yeah. Whatever fits on your sign. If you got a long last name, all right, then go PA, right? Because you have to put that on your signs too.
Oh, you do? Mm-hmm. If you already have signs, then you gotta.
Yeah.
Actually, you do not have to have it on your sign.
Oh, hang on. Here we go. Update.
Well, here's the thing, you can do that, but the correct rules state that if you're going to use, well, you gotta use the name of the company on there, and then we all know from our class that the second rule is that you have to have, it's hard to do it, is that you have to, if you're going to, well, they changed it now, they used to say if you're going to use the name, but you're going to use your name on there. But when you use your name on there, you must use, at minimum, your last name.
Okay.
So I can literally have Future Home Realty,
Sham.
Chance, my phone number.
Okay.
That's it. 'Cause
All right.
they can't look you up.
So don't, yeah.
They look you up
Don't.
the DVR for your license by your last name.
All right.
That's why they require it has to be your last name. I can't say Jim the Realtor. So I couldn't
Right.
say Chance the Realtor.
Yeah,
I
I
could
see.
say that. I'm
Right.
not going to because it sounds ridiculous. But you can't say PA or LLC at the end, it's fine.
Right.
So, but you're not
Okay,
forced
so
to do it.
you don't
on
have to.
market.
If you
Don't have to.
some
At this
signs out
point,
there,
you're
you
not.
can add it
Yep.
later if you want.
If you want to add it because you think you're going to, all of a sudden now you are hoity-toity because you have it.
We're gonna have to
All right.
change that rule. They just haven't yet.
Yeah, we'll wait
So-
for Brett to change this.
This year, taxes, and I'm one of those persons that's gonna pay the taxes.
That 2017 boat that boat has sailed.
So start the PA fresh, beginning of the year.
Yep, all your future income going forward. Because at 2017, you're paying 15.3. All right, if you're a C filer. The only thing I can help you with there is find receipts on the ground and make them your business expense. Okay?
This is my undergrad, so that's another.
Yeah, perfect. Yeah, absolutely. Sure enough. All right. Here's the other quick. I don't put this on, and I'll put it out there. It's going to be out there, right? But Jeanette and I have 4 or 5 different corporations. Okay. By law. Okay. Under the rules of corporations, I have to have an annual shareholders meeting.
Is that called vacation?
Yeah, well, I've had them in Vail, I've had them in Cancun, I've had them in, because Jeanette and I are the two shareholders, okay? Have a little gavel we carry with us. Ding, ding, let's call it to order. Okay, done. Bam, let's go back to the beach. All right? But IBM does it. They send their board of directors to the shareholder meeting. All right? Write it off as a business expense. Just saying. It's up to you. Okay? I'm just telling you, my shareholder meetings have been all over the world.
And shareholder meetings are tax deductible, that's not a K-1.
No, that comes right out of the expense. Okay? See?
Where were you last year?
I'm telling you, where you've been all my life. I told you. All right? Okay? It's what it is. So, but January to December, that's just the easiest way to go, right? Because we want it to mirror and match up with our 1040, because we're all doing S corps, which are pass-throughs. So I want to pass through and just, hey, that was the money from 2018, feeds to my 1040 for 2018, and it's all good. Okay? Are all accountants the same? Absolutely not. Find one that knows what they're talking about. All right? We joked about, Walmart and Jackson Hewitt earlier. Okay, but they're probably going to say, what? All right, if you try to drop this on them. All right? I've got some people reach out to me. There's a guy, we can give his name. His name's Todd Unbehagen with Paget. Or he doesn't call him that. Back in the day, his dad incorporated me. Okay, so it's how long. Okay, but Todd is a great guy. We've got probably 400 agents that are incorporated. Okay, and probably 300 of them use Todd. Okay, yeah, for their taxes. He helps handle all that stuff. Unbehagen, Unbehagen. They're out of Tarpon, but they also have an office in Tampa, and they can just go anywhere, right? Everything's virtual now anyway, so it's all good. So, but he does understand.
And
all right.
free initial.
Yeah, they'll talk to you, absolutely consult with you, and say, hey, look, here's what you know what. Should you do it? Should you not? And so on and so forth. Cool. And again, no affiliation. Trust me, I'm not affiliated with a title company or a mortgage company anymore. All right, that ship has sailed as well. Been there, done that. Got the T-shirt. It fell apart in the wash, and here we are. Okay, all right. One last benefit. Here's what I found. Our incorporated agents are more successful than our non-incorporated agents. Okay? They take it serious.
Yeah.
It's just, there's something inherent. Now some of you would say, well, because they've done the analysis to understand that there's a benefit to doing it, and only certain income levels would pay to do that. That's true, all right? But the fact that they've even taken the analysis to figure out what they made last year, all right, is separating you from the other 90% of realtors out there. I'm just telling you, right? We see it all the time. Jim, we see a lot of realtors, right? And the number of agents that actually take their business and treat it like a business is slim. And when you start to do that, guess what? The public senses that. They smell it on you. You can smell success, okay? It smells like a turkey sandwich sometimes, but all right? I'm just telling you, you can smell it. You can tell when people are successful, right? And it's just inherent, because what happens is it forces you to have a corporate business account. It forces you to do your monthly analysis of your P&L. To get it, it forces you to do all these things that you should be doing anyway. I get that, but we don't, right? And that inherent forcing of doing it, okay, is they treat their business with the respect it deserves. All right? That's why I found that to be the case. So even if let's say it was break even. Let's say I couldn't show you how to save 5, 6, 8, 10 grand, depending on how low can you go, right? Okay? But if I couldn't show you how to do that, but I could help you get to there, that's an inherent benefit in and of itself. Really is, right? I encourage you to analyze your numbers consistently, regardless, right? You need to take a look. All your expenses. I put something on our 100K page today about now that I'm taking this accounting class, and it's accounting/finance, so I've had to dust off my financial calculator, right? And now it's a good reminder for me, right? As I'm looking to spend something, I start doing a quick future value of that money. All right, man, if that was invested at 8% for the next 10 years, okay, instead of spending that $1,300 today because I want that bigger screen whatever, right? It really starts to make you think a little bit, right? You say, that $1,300 invested over the next 10 years is worth, $4,800. Where'd that happen? You know what I mean? That's, how about that? So invest instead of spend, as we talked about, right? You need to look at all your stuff. If you're looking at your numbers consistently, you're going to say, okay, is it wrong to pay for Zillow zip code? I'll tell you when it's wrong to pay for a Zillow zip code. When you spend $1,000 and only make $200. Right. Okay? Is it right to pay for a Zillow zip code? I'll tell you when it's right. When you spend $200 and you make $1,000. Right? And that's anything you do in your business, right? It should be an investment, and that's the sole definition of a difference in an investment and an expense. Investment means you make more money from it than you spent, right? Expense means it costs more money than you made. And so with that in mind, are we going to invest or are we going to spend? All right? And do this. Challenge yourself. Right now, future, I think they're all full, so maybe we'll do them in January for the public. But I'm going to run around to our offices and doing business planning. And here's the thing about business planning. There's nothing new under the sun. Right? All I'm going to do with these business planning sessions is tell you how to set a goal and break it down into bite-sized pieces. All right? Just like every business planning session they did since Gary Keller was in diapers. Okay? It's just, and even before that, you take the big goal, you break it down, all right? Arcadius Barr, he used to be one of our agents, he started his own property management, great guy. He put something out on one of our pages for our group of, some of our agents, called Win the Day, right? How do you win the year? Okay? Exactly. How do you win the year? Well, you win 12 months. Well, how do you win any individual month? You win any individual week. Well, how do you win the week? You win each individual day. And how do you win the day? You win each individual hour. Okay? That is, and you break that down into that, Katie bar the door, game over, you win. I'm just telling you, if you're committed to it. Now, it takes accountability, it takes discipline, all those kind of things rolling in. So you start with the plan, that's what that's all about. But then you implement, and then you got to be accountable to that. And then you're going to evaluate your progress consistently. We're not going to wait till December 28th to say, oh, how am I doing on my goals? Right? Holy smokes, supposed to sell 42 homes and I've sold 4. I've got 3 days to sell 38. Okay? Okay. That's what we do, right? It's too late, right? So we've got to do it a lot sooner than that. All right? And so we start to evaluate, we adjust because we've evaluated consistently enough, so now we can adjust and make some small tweaks. How many of you guys know it's easier to lose 2 pounds than it is to lose 20? Right? So that means we've got to step on the scale more than once every 6 months. Are you with me? And that's the same thing we need to do with our business, is we need to put our business on the scale more often. So, added 1.8 pounds, okay? I can take care of that. When that decimal moves, and then now it's 18, you start to get frustrated. You're like, what the heck, man? I need to go console myself in a half gallon of mint chocolate chip, right? Or whatever, right? And so that's what happens, right? And so you got to do that, all right? And then at the end, that's success, okay? So challenge yourself to do that. Any questions I can answer for you now? Yes?
I tried to go on it. It asks for a registering name, and it can't be the name of the person that's filing.
Oh, to incorporate on Sunbiz?
Yeah.
Let me check. I'd have to see. If you've got a second, I'll stick around. Let's take a look at it. Yeah, let's take a look and see.
Another one.
Yeah.
So it asks, we'll look at it if we're gonna sit down. I'm fine.
Okay, unless anybody else have that same question, we can maybe
No, it was also something on
DBPR, on the Sunbiz.
Yeah, you like click either corporation or LLC, but then you're putting your name as PA.
Gotcha. Okay, we'll take a look at it. If you got a second, let's just dig through. Any other questions? Sarah, you want to wrap up anything?
Yeah.
Okay.
Can I get a card from everybody? I have a little giveaway.
Oh yeah, Sarah loves giveaways. She's good. You good, Jim? I'm going to wrap. Okay.